Hello, and welcome to the forum. Every week, we take no more than 5 minutes to discuss 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. Without further ado, let's dive into this week's ideas. Good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers, where we use the forum to discuss the best, highest conviction insights surfaced across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. At the end of every week, we take video recordings of the forum and convert them into short bite-sized pieces and upload them onto our YouTube channel to make it easy for you to revisit these ideas at your own time and pace. This also makes it easier for you to share these ideas with your friends and get their feedback. Every week, we try to bring you a range of ideas from large caps, small and mid caps, as well as core thematics. Today, we'll begin by looking at China Gas Holdings, then we will move on to JD.com, and lastly, we take a look at emerging Asia benefit from investment diversification away from China. Let's begin with China Gas Holdings. The ticker is 384 Hong Kong, and this is an insight covered by Osbert Tang on the Smartkarma platform. China Gas Holdings operates and manages natural gas distribution pipelines and gas stations. Dismal share price performance has created an opportunity for bottom fishing. Management also looks positive with 30% profit growth guidance for FY23. Derating over the last 3 years has put the stock on undemanding multiples of 8 times PER and 0.75 times P over B. Its 14.8% 3-year EPS CAGR is also better than sector average. Next, we have JD.com. The ticker is JDUS, and this is an insight covered by Sean Yang on the Smartkarma platform. JD.com is an online direct sales company in China which offers a wide selection of products. We expect C2Q23 revenue in line versus cons and non-IFRS net income 6% versus consensus. 5% year-on-year revenue growth estimate is unchanged as IP expects 3P take rate decline to offset GMV growth. IP maintains sell and TP US $32 but cut FY23 non-GAAP net margin to 3%. This is due to a greater share of lower margin 1P revenue versus prior estimate. Lastly, we take a look at the question, can emerging Asia benefit from investment diversification away from China? This is an insight covered by Manu Bhaskaran on the Smartkarma platform. The UNCTAD World Investment Report provides further evidence that China is no longer the investment magnet. Greenfield investments remained resilient in emerging Asia despite the global macroeconomic difficulties. This suggests that growth opportunities remain available. Investors are taking note of the cyclical and structural difficulties with China. They are reallocating their capital elsewhere, and Southeast Asian markets stand out as winners. If you found the forum useful but have follow-up questions, please feel free to continue the conversation on Smartkarma. We hope to speak to you next week, and until then, all the best and goodbye. That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button so you'll never miss out on another episode. If you liked these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thank you for watching and see you next week.